Hello friends, welcome back to my YouTube channel Law Educators. Friends, so today we will learn about the corporate law and in which we will cover an important topic which is business organization and corporate personality. The topic of business organization and corporate personality has become an important part of the field of business studies as well as to understand the corporate. It closely studies the types of business organizations, advantages, disadvantages of doing business in different business organization. The knowledge of this topic is necessary not only for the commerce student but also for who wants to enter into the line of business. In the present module, we will discuss in detail about various forms of business organization that exist in India. So let's start with this. So first we need to understand business organization and corporate personality. So you can see there is some objectives given in the right side of the video. So first objective to know about the various forms of business organization in India, to know the meaning, features, merit, demerits, suitability of sole proprietorship, to know the meaning, feature, merit, demerits, suitability of HUF, to know about the advantages and disadvantages, and to understand the corporate personality, to develop an understanding of the core principle of the laws that regulates business organization. So first we understand what is business organization. An organization or enterprising entity may be engaged in commercial, industrial or professional activities. A business can be for profit entity such as publicly traded corporation or non-profit organization engaged in the business activities such as an agricultural cooperative as well. According to L.R. Dixon has defined business as a form of activity pursued primarily with the object of earning profit for the benefit of those on whose behalf the activity is conducted. Business involves production and or exchange of goods and services to earn profit, or in broader sense to earn a living. Profit is not the sole objective of the business. It may have other objectives like promotion of welfare of the workers and the general public. Business activities include production and distribution of goods, services which can satisfy human merits or human wants. The term business should be used to convey the same meaning as the term trade. Simply denotes purchase and sale of goods, whereas business includes all the activities from production to distribution of goods and services. It embraces industry, trade and other activities like banking, transport, insurance, warehousing, which facilitates production and distribution of goods and services. According to F.C. Hopper, the whole complex field of commerce and industry, which includes the basic industries, processing and manufacturing industries, and the network of ancillary services, distribution, banking, insurance, transport, and so on, which serves and interpenetrate the world of business as whole, are called business activities. So outcome of this learning, by the end of this part and having completed the essential reading and activities, student would be able to understand, categorize of common form of business organization and their main features, able to delineate the legal distinction between incorporated and unincorporated association, able to understand corporate personality and advantage and disadvantage of the same. Now we move into the nature of businesses. So dealing in goods and services, profit motive, uncertainty or risk, regularity and continuity in dealing, production and exchange. These are the natures of business. The first, dealing in goods and services, the first basic characteristic of a business is that it deals in the goods and services. Goods produced or exchanged may be consumer goods such as bread, rice, cloth, etc., or capital goods such as machines and tool, etc. Second is production and exchange. Every business is concerned with the production and exchange of goods and services for value. Thus, goods produced or purchased for personal consumptions or for presenting to other as gift do not constitute business because there is no sale or transfer for value involved. Moving to the third, which is regularity and continuity in dealings. One single sale transaction cannot strictly constitute a business. A sale of product can be called a business if it is undertaken frequently. Now, next is uncertainty or risk. It is true that the element of risk is present in almost all economic activities, but it is undoubtedly more significantly present in business activities. Profit motives. Everyone engages in business primarily with a view of earn profit and acquire wealth. Profit motive is also accepted as a desirable objectives even for the governments, enterprises engaged in business. In case of government enterprise, profit is termed as surplus. Now moving to the functions of businesses. This is very important to achieve its objective. A business endeavor perform many functions which may be broadly grouped under the following headings: production, marketing, finance, and personal. Now understand production function. Under this function, a business organization transforms its inputs like manpower, material, machinery, capital, information, and energy into particular outputs as demanded by the society. Now, next is marketing function. This is concerned with the distribution of goods and services produced by the production department. As we all know that in order to make a business successful, how important is marketing? The marketing department guides the production department in product planning, development, and prices of various products produced by the business. It also promotes the sale of goods through advertisement and sales promotion. Next, moving to finance function. Money is important factor in any businesses. Thus, arrangement of sufficient capital for the smooth running of business in an important function for a business organization to undertake. Many important decisions such as source of finance, investment of fund in productive ventures, and levels of inventory of various terms are undertaken. Now moving to the last function, which is personal function. As we know that if you want to make your business successful, then you need to have people who can help you to making it successful and achieving the business objective. Hence this function is concerned with the finding suitable employee, giving them training, fixing their remuneration, and motivating them. Moving to the another topic, which is company. So let's understand what is company and what is the feature of company. A company is an incorporated voluntary association of person is business having joint capital dividend divided into transferable share of a fixed value along with the feature of limited liabilities, common seal, perpetual successions. It may be public, private, foreign, small, associate, holding or subsidiary company. Companies may be incorporated with the limited liabilities of its member or with unlimited liabilities. Liability of member may be limited by shares or by guarantee. So there is some features. The first feature is a company is an artificial person created by law to achieve the objective of for which it is formed. A company exists only in the contemplation of law. it is an artificial person in the sense of that it is created by process other than natural birth and does not possess the physical attributes of a natural person. This forms of business organization has a continuous existence and its life is not affected by the death, lunacy, insolvency or retirement of its member. Members may come and go, however the company continues its operation so long as it fulfills the requirement of the law under which it has been formed. There is some merits. The first merit is by issuing share and debentures to the public or public company can raise large amount of money. Under this form of business organization, shareholders have limited liability for the shares they hold in the company and their private property is not attachable to recover the dues of company. As consequences, the people who don't want to take big risk in the industry, they find this kind of business organization really attractive. This forms of business organization has continuous existence and its life is not affected by the death, lunacy, insolvency or retirement of its members. Members may come and go. However, the company continues its operation as so long as it fulfills the requirement of law under which it has been formed. Transferability of shares. Shares of a public company are freely transferable, whereas restrictions are placed in the case of transfers of shares in case of private companies. As we know that company can raise large amount of capital, this allows the company to take large scale operation. Scope for expansion and growth is much higher. Now moving to understand the corporate personality. So corporate personality is the creation of law. Both English and Indian law recognize legal personality of a corporation. A corporation has legal personality of its own and it can sue or can be sued in its own name. It does not come to end with the death of its individual member and therefore has a perpetual existence. However, unlike natural person, a corporation can act only through its agents. Law provides procedure for winding up of a corporate body. Besides corporation, the banks, railways, universities, colleges, church, temples, hospital, etc. are also conferred legal personality. Union of India and state are also recognized as legal or juristic person. Corporation are two kinds. First is corporation aggregate. This is an organization of human beings united for the purpose of forwarding their certain interest. A limited company is one of the best example of corporate aggregate. This kind of a corporation is formed by the member who are in agreement to contribute to the capital of the company in furtherance of a common object. Thus their liability is limited to the extent of their shareholding in the company. Shareholders have a right to receive dividends from the profit of the company and exercise voting rights in the general meeting of the company. The principle of corporate personality of a company was recognized in the case of Salomon versus Solomon Company. Now, second is corporation soul. This kind of corporation is stated by a single person who is personified and regarded by law as a legal person. This single person exercise of some office functions, deal in legal capacity, has a legal rights and duties toward the same. The object of corporation soul is similar to that of corporation aggregates. So now we understand about types of companies. So first is sole proprietorship. So sole proprietorship, perhaps the easiest way of stating of a business, is nothing more than the proprietor itself. It is not an independent legal entity and all its assets are deemed as the asset of proprietor. There is no specific registration requirement either, which makes the process of starting a proprietorship a lot less cumbersome. In case the profile of proprietorship triggers the requirement under the Shop and Establishment Act, a specific registration has to be done. This regulation, along with bank statement, often acts as name and address proof of the proprietorship. Even in the term of operation, there are no restriction or continuous compliance as such. Note that the personal income of the proprietor as well as that of proprietorship is deemed as one, and no separate tax returns are filed. Clearly, this model is not suited for venture where there are two or more founders. Now moving to next, partnership firm. A partnership firm is more structured and requires registration under Indian Partnership Act 1932. 2 to 20 partners come together, decide their contributions, duties, salaries, etc. Sign a partnership deeds and register it with the registrar of partnership. Clearly, there is a cap of total number of partners. Further, it is important that all partners are physically present before the registrar at the time of registration. So it is not most suitable if one founder resides in different city or state. Once registered, the term and condition of the partnership deed will govern how the firm will operate and the extent to which each partner will be liable. While the partnership firm is not a separate legal entity, it has limited identity for the purpose of tax where the firm is taxed separately from its partner. One of the biggest advantages that partnership firm has over its competitor in title is that it is less cumbersome to wind up if the partners so desire. This is big factor when the founders are looking to start a venture more as an experiment. Further, it can also be converted into LLP, the limited liability partnership, the benefit of which have been explained below. By filing requisite form with the registrar of company. For founder looking to raise money, a partnership firm may not the ideal entity type. No financial investor would take on the liabilities that associated with being a partner and would always ask the co-founders to convert the partnership structure into a LLP or a private limited company. So even though it is relatively the most cost effective and easy to manage entity structure, it is not suited for the startup looking for investors. Next, moving to the private limited companies. It is a distinct legal entity, different from its shareholders and key managers, unlike a partnership firm described in the two above. Incorporating, it requires a minimum of 2 shareholders or 2 directors, and the shareholders and the directors are personally not liable for the acts of the company but can be fined or imprisoned in their official capacity. So there is 2 directors, 2 shareholders are the requirement for private limited company, and they are not personally liable for the acts of the company but can be fined or imprisoned in their official capacity. It is important to understand the role, duties as well as liabilities that are associated with the being of director. Further, the minimum authorized and subscribed capital of a private limited company has to be rupees 1 lakh. For a lot of early stage startup, this was a hurdle because they have to put in their own money in addition to rupees 1 lakh that had to be transferred in the company's bank account for share subscription. There are also costs associated with incorporating the company and paying stamp duties. This requirement of minimum capital has now been done away with. No company, whether public or private, is required to have any capital for incorporation of the company. A company requires substantial compliances as well. For instance, there have to be quarterly board meetings, various registers have to be maintained like register of assets and share transfer, etc. Accounts have to be adopted within the 6 months from the closing of the financial year and filed with the ROC, etc. Unlike a sole proprietorship or partnership firm, in case of the co-founder decide to shut shop because the venture did not work, winding up the company is not easy. It is a completely code-driven process and can take anywhere between 1 or 2 years. No founder is happy about spending more money just to wind up the company, especially since the company is being wound up because it did not make enough money. So clearly, if the founders are only experimenting with their ideas or don't want to invest too much money in the entity but use it towards their business, a private limited company may not the best options. From an investor's perspective, a private company is stable structure because not only their investment relatively secured, it also demonstrates seriousness of founders to do the business. Now moving to the next, which is one person company. It is very important and very recent concept introduced through the new Companies Act 2013. As the name suggests, the Companies Act allows one shareholder to incorporate a private limited company with only one director. This gives operational ease or comfort to proprietors looking to give a more stable and independent structure to their business. Of course, since OPC, one person company is a legally incorporated entity, it has to ensure compliance with the Companies Act 2013. However, it has been given some operational freedoms. For instance, one person company does not have to include a cash flow statement in its financials. It is required to hold only 2 board meetings in a calendar year, one in each half with more than 90 days gap between 2 meetings. In terms of capital, and one person company like a private limited company also requires a minimum authorized and subscribed capital of rupees 1 lakh. In case the subscribed capital goes beyond 50 lakh or the turnover exceed 2 crore, one person company has to file the requisite forms with the ROC to get its status converted into private limited. Winding up of one person companies follows the same process as that of a private limited company. It takes time and can be fairly expensive. Based on the characteristics, one person company is suited for a single founder who wishes to launch his or her its product service in a more structured manner or get a taste of how to run a private limited company. However, like a private limited company, it is not meant for founder who is looking to experiment with the venture. So one person company in other jurisdiction, China introduced one person company in 2005, in which the promoting individual is both the director and the shareholder. One person is only allowed to apply the opening a limited company with a minimum capital of 1 lakh yuan. The amended law of China allows the owner to pay the investment capital at one time, which bars him for opening a second company of the same kind. So friends, our first topic related to corporate law series is completed, and I hope this will help all the business students as well as legal students to understand the corporate personality, company, types of companies and business organizations. Thank you for watching the video. Stay tuned.